Good morning, everyone, and happy start to the week. Let's get started. Let's dive right into this morning briefing to kick off the week. What is there to say? The week had ended first with a significant bearish plunge, and then with a recovery towards the end of the evening. Over the weekend, in particular, yesterday, there was an interview with Trump on Fox News in which he threatened a possible recession for the American economy in 2025. In light of these significant changes that his administration is bringing, so this has a little bit shaken things up. The markets, in fact, opened lower. This in the evening for us Europeans, of course. So we'll see how things develop. The American indices are currently in a bearish phase. So let's get started with this briefing this morning. From the weekly charts, let's take a look here. This is the weekly chart of the Nasdaq, our usual partners. And let's take a look. So you say how was it? In short, a nice clean neckline, that's a must. A pivot line here. It's quite clear that it was broken last week. So we're working on it with the utmost attention. So especially in light of Trump's remarks, the market is expecting, of course, we're expecting some positioning from the traders, basically. Let's take a look then, as usual. Not only on the Nasdaq, but this is also the chart of the S&P 500. Same setup. Classic of this pattern, which is the Tubete. So patterns that have a certain reliability. So as we see when they develop at the weekly level, they lead to rather strong movements. We'll see, how far this can go. So just a moment. Well, it has already come a long way. As I was saying, let's take a closer look in detail. Let's start with the Nasdaq with the usual 5-minute chart. Today, there are no important macro data, so the day should go by smoothly, at least from this perspective. So quiet unless something comes up. In short, declarations in progress. As for the Nasdaq, at the moment, well, I repeat, after the opening down, an immediate downward push. Probably as a consequence of this interview that I have mentioned little, indeed, which has these new prospects of a possible recession for the United States in 2025. So the market quickly took a position. Right now, we're working on the SD2 levels, on the lower levels of the BC3 that we have. So with our usual composition. So, an exit from this BC3 range, we know that it can definitely give space there for further bearish pushes. So I repeat, at the moment, the situation seems quite clear to me. So there's a bearish push, Netta and Chiara. That is developing. So maximum attention is needed in this regard. A similar discussion also applies to ES, Serbian. Just a second, here we are. A 5-minute chart of our... Okay, so here as well, a similar situation to that of the Nasdaq. We have broken, in short, the range area of levels BC3, at least those that have developed so far. We're working below SD2. I'm almost at the Hicks levels. So the situation that already this morning it's 10 o'clock. In Europe, in short, things are already being done quite a bit. It's quite heavy for the American indices. In short, this immediate downward start. So we'll see how it goes here as well. In short, the developments. We also have the weekly levels that can help us in case the day's range gets broken immediately. We do have some references either higher or lower to help us adjust. To have, therefore, some additional references. Let's take a look to the other American indices, starting with the Dow Jones. I'm not going to show you the weekly one, but the chart pattern is exactly the same. Also, on the Dow Jones, on the weekly chart, we have a nice pattern at the top that was confirmed with the break of the PV call. So, in short, the situation here is also quite advanced at the moment. Even here, in short, we've already gone to the rare levels. In the morning at 10 o'clock, the first support VIX, and then it gave way to this nice bounce. So as per the strategy, a nice counter trade this morning. So for those who were lucky enough to do it, me. So among all the attractions of the various level publications, the morning, I really don't have time anymore to dedicate to trading, which, might even offer some nice opportunities in the morning. So we were saying, about this situation for the American indices. So I repeat, it's quite a race with the Dow Jones, and here too the situation is similar. We're working below the levels, below the BC3 levels. So at the moment our day looks like this. So it's quite heavy, the discussion, of course, for the Russell, even though at the moment, it's holding on a little bit, just a little bit better, with, an immediate recovery. So we're still within the BC3 levels of the BC3 range. So this is still, let's say, what we were kind of expecting with a bearish pressure at the opening after breaking this level. Obviously, the pressure intensifies and the whole discussion amplifies. Obviously, from a weekly perspective here too, for the pattern, there was, a video. Maybe you can watch it calmly so that you can also get used to recognizing, looking at these charts with these very well defined weekly patterns. So this should give us, an important indication that on the higher time frame, we're definitely in a bearish condition at the moment. I wanted to take a look at oil. This is still a weekly chart of oil. So at the moment we're working, let's take a look at these levels. Be careful, at the moment. So now volatility is decreasing on the product. We're seeing these swings getting smaller and smaller with higher highs and more or less constant lows. We're resting on these levels of 65 probably. We will continue to dance. Even in light of these new scenarios, any potential American recession could definitely lead to that. It has lower consumption, so there's a decline in price. We'll see what the developments could be. This well is a very particular asset because it has several exogenous factors, so independent from what the market dynamics are, they can definitely influence the price dynamics. Let's take a look as well on the reference time frame, which is our 5 minutes, and we get back to it. The levels at the moment, hold the range of the BC3 levels, and we're working on it internally. Just a moment, so it's a pretty in anticipation. We'll see if we can, as usual, walk within these BC3 levels. With the support of the daily levels, you can definitely do it. Operations swing from the range, well calibrated. Okay. So, and is regarding oil. I forgot to take a look at the DAX, which I sometimes, honestly, to be fair, a bit often overlook, maybe because, and honestly, I think it is not very popular with many people. Not many people follow it. At the moment, the situation, we're opening lower. We're working below all the levels. How many PC levels? Are we, Aliyah, maybe a weekly level. Let's see if we can look at something better. I also made the mistake. I think I uploaded all the weekly levels twice, but at least I have almost my own chart. So the situation here is a bit different in the sense that there's a point of increase, but given how the world is today, so given how the world is interconnected today, in short, globalized, of course, if this scenario regarding the US economy were to materialize as true and therefore as, in short, real in every sense, certainly for Europe as well, there would definitely be a period of interconnection of all these phenomena. So maximum alert here too. Also, yes, there's a bit of a pull on European styles. So a bit of this, as we've already mentioned several times in the previous ones, morning briefing, a greater challenge, a greater a greater pull from the stocks that are part of the arms industry for this rearmament plan launched by the European Commission. Let's take a look at them. The last one left, this is a weekly chart. I'm not even going to remove the lines. It's well defined here too. Last week, there was a nice retracement after hitting these highs. At the moment, the situation is recovering. Well, it's trending upwards. Well, it seems pretty clear to me. We've exited this range. It was a nice bullish push. Maybe we find ourselves with these KSPs that are too many. Let's take a moment. Also, the levels. Okay, here they are. To give you an idea. So this is the weekly chart of gold. So in short, last week definitely needs to be put into context with a nice retracement that happened. If we take a look at it, then in detail, maybe here on the 5-minute chart, we realize where we might be in relation to the weekly chart. That's why it's important for me, as I always suggest, to have a complete view by looking at, in short, the parallel, the asset across different time frames. At the moment, we're still here in this range for a few days now between two. No, at the moment, it's reduced compared to the larger one, but at the moment we can identify it between 29 and 40 and 29. So in short, this is it for now. The range will work. If we obviously add the levels, we realize it's better, that we're working. And what level between Trey and SD1, SD2? Up RD2. So this is the maneuvering space for gold today. Obviously, I'm expecting more of a breakout, an upward movement, probably not a downward one. So with a potential new attack on the 3000 area, I don't know if everything, definitely not today, but maybe over the course of the week, watch out for big, again at high levels. I'm around 26 and just a little something. So here too, it's a situation to keep an eye on. So levels this high for Vic. We need to going back quite a bit, already in August to find myself, after August 5th for the depreciation for the intervention of the Bank of Japan. So absolutely everything needs to be monitored. Maximum attention, volatility is increasing. As I have said and pointed out several times, we find ourselves in a condition of binary war operations. So very directional swings, very, very precise, and also quite violent in some situations. So maximum attention, recalibrate the sizes. Based on these new scenarios, I recommend maximum attention. As always, I wish you good trading, a good trading week, and a good trading day. We'll see each other again, as always, in the chat. Thank you all for your attention.